Good morning, folks. It is Wednesday, May 10th. It's almost 10 o'clock in the morning on the East Coast of the United States. Markets are open. We're going to do a quick run through the charts this morning. I want to start with this article. So one of my brokerage accounts is at TD Ameritrade. And later this year, TD Ameritrade will become Schwab. I don't know if it's a merger or Schwab bought TD Ameritrade. Not sure of the details of that. But anyway, later this year, my TD Ameritrade account will become a Schwab account. Now, there are some concerns about Schwab because one arm of their business is banking. And obviously, all of the banks are in trouble at this point, even the big ones. And so there's concern about the brokerage arm of Schwab being affected by what could happen in the banking arm of Schwab. Excuse me. And so anyway, this article speaks directly to that issue and makes this point. And I think this is the relevant point, the key point. Schwab is too big to fail. Got $7 trillion in assets. $7 trillion in assets, just too big to fail. And he goes on to say that, if, for example, if they were to somehow do something with the money in my brokerage account, it would start a run on Schwab and the rest of the bank. All of the brokerage providers would be at risk if they start screwing with brokerage accounts. They're going to be in a world of hurt. Not that they're not in a world of hurt already, but so anyway, bottom line for me, I am going to leave my money in my TD Ameritrade account. Well, it's not money, it's securities, it's shares. I'm going to leave my positions in TD Ameritrade, allow them to move to Schwab, and just hope for the best. And it saddens me and frustrates me as an investor that this is even a factor. We should not be talking about too big to fail as an aspect of where do I park my money. That it simply shouldn't be. We shouldn't be having this conversation. But anyway, so Schwab's too big to fail. $7 trillion in assets. It's as safe as any other bank or brokerage account at this point, whatever that means. And of course, just for background, the way I have structured my overall investment portfolio, I don't have a lot of money in stocks. The bulk of my investments at this point, folks, it's physical precious metals. And heavily weighted to silver over gold. I believe silver is the big. It's a speculation. Silver doesn't have the monetary background that gold does, but I believe that silver is the better speculation over gold. So I think silver will far outperform gold in this current bull market. So anyway, on to the charts. This is gold in the monthly time frame. Gold's headed higher, folks. Certainly in this time frame. I mean, this, to my eye, this looks like price is staging a breakout above the top end of this trading range. Gold's been in this trading range for the last, what is that, 2.5 years. And it appears that price is now breaking above that level. And of course, this I've talked about. This is a flag pattern, pennant flag, however you want to look at it. The technical analysis of this particular pattern is that once the flag completes, that the vehicle in question, in this case gold, obviously, it will duplicate the flagpole. It's going to duplicate the flagpole, and that's this pink line here, gives us a target at 25.10. And so that's still my expectation. We're headed to 25.10 in this time frame. Another piece of data we can get from this flag pattern, is that when we duplicate the flagpole and we move it to what we think is the bottom, that this point here, that price point, is the bottom of the flag pattern. When we duplicate the flagpole, it gives us a price target, 25.10, but it also gives us a rough estimate of time. So if we're wondering, it's like, yeah, okay, 25.10, that's all well and good. When's it going to happen? Well, based on this flag pattern, we might think, late 2024. And that seems reasonable to me. Could happen a lot quicker than that. Actually, I actually think it will happen much quicker than that, but we'll see. I'm okay with late 2024. Let's see, other indications here. MACD is in bull mode. Both indicator lines are above the zero level, suggesting that the primary trend is to the upside, and we're on a recent buy signal. So, and then, another thing I look at with MACD is levels of oversold and overbought. And so in MACD, this is our next overbought level. And so we've got a lot of room to run before gold becomes overbought in this time frame. So, and then of course, energy very elevated based on stochastics there. So just a lot of positive indications from gold in the monthly time frame, heading for 25.10. Golden weekly, again, it's dealing with 2,000. And so 2,000, it's a big round number. It's psychologically significant. Not surprising that gold needs some time to work through that level. And so that's what we're seeing now, I believe, is that gold is in the process of turning resistance at 2,000 into support at 2,000. I believe that's what we're seeing right now, is that 2,000 is becoming support. Now, I'd like to point out, if we look at these prior peaks, we notice how the price threw up, and of course that's a very impulsive move up into that. That was a new all-time high in early 2020, and then price sharply drops off. Same thing here again in early 22. Impulsive rise, push up into, that wasn't a new all-time high, but nearly, and then a very rapid collapse in price, another test of 2,000, and then price drops off. But notice the difference on this push into 2,000. This is not a spike. I mean, we did get the impulsive move, but then we got a sideways consolidation. So 2,000, the 2,000 level did not repulse gold this time around. Instead, gold did a high consolidation at that level, or just below that level, pushed up through it a couple of times. But the key difference is that it hasn't dropped off. Gold didn't drop off from 2,000. It's pushing into 2,000 and higher. We actually got a new intraday all-time high. Is that last week or the end of the week prior? 2085, I believe. We'll see it here in the daily chart here in a sec. But that was not that wasn't a closing high. That was a intraday high. So, but now we're continuing this week and pushing higher. So, last week that price bar was looking quite toppy. It basically looked like that bar. Big push and then a decline. But price is pushing steadily higher at this point. MACD, it pushed into and through, apparently so far, has pushed above the level of this prior peak, which, as I was just saying, that's a level of overboughtness, an indication of being overbought. But price, MACD, is continuing higher through that level. So, and as I've stated before, MACD is not a bounded indicator. It can go to infinity if the price action and etc. There are no bounds on MACD, but these prior highs and lows tend to act as support and resistance levels. And so that's why I pay attention to MACD. So the next overbought level in this time frame is way up here. So got a ways to push higher before we become or before we reach the next overbought level. In the weekly and daily time frames, gold is fairly overbought. I mean, this was a big run. What is that? 1650, and we're now, call it 2050. That's $400. So $400 in, what's that, October, November, December, what's that, 7 months, something like that. 7-8 months, gold has gained $400 an ounce. That's a big move. And so, overbought, but trying to work higher. Energy is elevated. Certainly got the conditions for a move higher. In the daily time frame, we can see there's that, it was last week. What was the high there? The high was 2085, which is new. That'd be an all-time high, I believe, but it's intraday, not a closing. And then, of course, big drop off the next day, but now price is pushing back higher. We can see overboughtness again in this time frame. Based on, MACD reached this level of overboughtness, and then we kind of went into this sideways trading range, pulled back, so we've got a little bit of room to run to the upside before reaching that overbought level again. But in general, gold and silver well, silver not so much, but gold certainly overbought in the short time frames. Energy elevated. So anyway, gold is looking good, in my opinion. Albeit, be careful on the short time frame. That we may still see a pullback. I don't know, but we may still get a pullback in physical. So here's silver in the monthly. Similar to gold, sideways consolidation, bumping up into resistance at this, what was that, 24-ish, and then last month broke above that level, and then now this month appears to be continuing higher from that level. We got a new buy signal in MACD, and got a ways to run before we reach overbought in this time frame. Energy is elevated, and so these monthly charts of both gold and silver are very positive. That lot of good indications in these monthly charts. Silver in the weekly, so pushing up into resistance from that prior high. Resistance at the upper median line of this shift pitchfork. So anyway, we've got some multiple levels of resistance that we're pushing into. Oh, and we've got this blue. This is a modified shift pitchfork. We're pushing up into the upper median line of that fork. So just multiple layers of resistance in silver. This flag pattern gives us a target at, we'll call it 2690, 2680, somewhere in there. So a little ways higher from where we are currently. MACD in bull mode on a buy signal, energy very elevated. Silver in the daily time frame, we can see, pushing up into resistance. What did I mark? This is probably the prior, so prior high, pushing up into the resistance from that prior high, median line of this Andrews pitchfork, overbought on a MACD basis, energy is elevated. So again, overbought in the short time frames, looking very good in the long time frame, monthly. Here are GDXJ, my proxy for the mining stocks, is clearly broken out of this downward sloping channel and appears to be headed higher. There's our next target from that previous high. What's that, 47? We're currently at, call it 42, 5 points. That's a 10% move. So 10% to the upside before we run into resistance from those prior highs. MACD in bear mode, suggesting that the primary trend remains downwards, but we're on a new buy signal and energy is elevated. And so let's look at the weekly time frame. Similar sideways consolidation. Yeah, I can't really say much about this week. Is that a break higher or just more of the sideways consolidation? I wouldn't hazard a guess there. Could be either one. MACD in bull mode on a buy signal, energy elevated. So again, mining stocks based on GDXJ in the weekly are looking pretty good. In the daily, pushing up into obvious resistance. Almost oversold on based on MACD. A little bit of room to run to the upside, but not a lot. And energy is elevated. So, yeah, let's drop down. That is the daily. And so, based on accumulation distribution, it appears that investors are back into accumulation mode, where they are buying and holding shares of GDXJ. Now, there are a lot of the junior miners that have not participated in this current rally yet, and so I'm expecting that is still in front of us. That we're ultimately we will see the junior miners participate in this rally, but a lot of them have not up to this point. Dollar monthly time frame, broke below. This is the 200 period. I think it's actually an exponential. Yeah, exponential moving average, 20 period, 20 months. And I just picked it, not totally at random, but it does a fair job of delineating when the dollar is in a bullish move versus a bearish move. And so when the dollar gets below this level, it tends to continue lower. And so anyway, that may be what we're seeing here, is that the dollar's continuing lower. Obviously, in MACD, we reached this level of overboughtness and then rolled over, and that hasn't changed. We're still headed lower in MACD. Energy is very low based on stochastics. So, based on this chart, you probably expect the dollar to head lower. In the weekly time frame, it's really just sideways consolidation. That's not enough of a. Couldn't call that a down. I wouldn't call that a downtrend. I'm going to stick with sideways consolidation. MACD's in bear mode on a sell signal, and energy is very low. So, dollar and daily time frame, sideways consolidation. So MACD bear mode, energy just below mid range. So let's see. This we're into the debt instruments now. This is my favorite chart. Added this last week just as a reminder to us of when the banking crisis started in the United States. That's this big bar. A lot of volatility there. Current action in the debt markets that analysts are talking about is yield on the 30-day treasuries versus 60-day treasuries. And for whatever reason, investors were favoring 30 days over 60, which suggests that they were not that they were comfortable, but they were more comfortable in 30-day debt than they were in 60-day debt. And so think about that this is the United States government, treasuries. That's supposed to be one of the safest investments in the world, if not the safest investment in the world. And I'm not saying that's not my opinion. That's what the consensus think is. Treasuries are the best form of money you can have, supposedly. In my opinion, I would say that about gold, but that's me. I'm gold bug, clearly. And I don't even know where I was going with that, folks. So let's be done with this chart. Yeah. Oh, yeah. So 30-day versus 60-day. Just that investors are favoring very short-term treasury instruments over anything long-term. And of course, with everything that's going on right now, we've got a debt collapse, we've got a banking collapse, we've got an inflation crisis, just a lot going on with money. It's not surprising that investors are moving to safety, which in this case means 30 days over 60 days. So yield on the 10-year, sideways consolidation. My expectation is that the trend in all of the debt instruments is towards higher rates. And so I expect that at some point, the sideways consolidation will complete and the 10-year will head off to higher levels. Yield on the 30, similar to the 10. Sideways consolidation, I think we'll be back up here, or the 30-year will be back up here testing, 4.4, 4.5, somewhere in there. MACD has currently, it's worked off. If it was overbought up here, it's not overbought anymore. So certainly room to move higher in MACD, which again suggests higher interest rates. So these are mortgage rates, 30-year fixed. FHA is going to cost you 6.7. As I've pointed out before, that's 6.7 for a single family house and a borrower with good credit, excellent credit. If you're looking at condos, jumbo loans, any kind of non-conforming aspect, that the rate's going to go up from there. So Bitcoin, Bitcoin got a big move up when the banking crisis started, and then just moved into a sideways consolidation at that level. And so that's what we've been getting for the last several weeks, just sideways consolidation. We got this drop Monday, pretty big drop. What's that, 8%? That's a significant move in one day. 8% drop based on the blockchain getting backed up. Over the weekend, Sunday night into Monday morning, some transactions were taking up to an hour to clear on the blockchain. And of course, isn't that, one of the numerous bullshit things we were told about crypto is, instantaneous transfer of money, blah, blah, blah. When transactions take an hour to conclude, to become part of the blockchain so they exist forever, an hour is hardly instantaneous. And so again, let me voice my opinion that all of the crypto, it's digital beanie babies, and ultimately will go away. The central banks are going to try to replace it with their CBDCs. We'll see if they succeed with that. Bitcoin in the weekly, bumping sideways, pushing up into pretty significant support resistant level. And so, strong resistance overhead in Bitcoin. And I would point out that, the move higher has not continued. So this was the initial move based on banking crisis, but prices didn't continue higher. The banking crisis has continued, no question about that. It's been in the headlines, all the talking analysts that look at financial markets, they're talking about the banking crisis. And so anyway, the banking crisis has not gone away, but Bitcoin hasn't moved any higher after its initial, after this big push higher. We haven't gotten another move, strong move to the upside. So, although more banks have collapsed. We're going to look at weekly charts for the equities, the SPX. For the last 6 weeks, it's been finding support along the lower median line of this Andrews pitchfork. And this week as well, it appears that that level is holding as support. Overhead resistance from that prior high appears that we're pushing up into that resistance currently. MACD's on a buy signal in bull mode, and energy is elevated. So the conditions are right, are conducive for a move higher in SPX. Although I would point out that the background for equities has not changed. Stocks are horribly overvalued based on just about any metric you want to look at. And we're headed into a recession. And so, the idea that equities could move higher from here seems far-fetched to me. But I have an obvious bias against the stock markets, with the exception of the mining stocks, which are just speculations. I guess there's the key, is that I don't invest in stocks. I speculate in stocks. And in my overall portfolio, I have appropriate position sizes for speculations versus investments. Meaning my mining stock speculations form a relatively small portion of my overall portfolio. So let's see, NASDAQ weekly pushing up into resistance. We've got, this is the upper median line extension of this shift pitchfork, and then we've got an Andrews pitchfork, and so price pushing up into resistance at both of those levels. MACD in bull mode, energy is elevated. So again, the conditions are right. Well, we got that prior high there. Conditions are conducive for a move higher in the equities, albeit they're overvalued. So and we're headed into a recession. But so there's NASDAQ. Let's see, Brent crude, oil. So oil, it's acting like perhaps it's finding support at the median line of this Andrews pitchfork. MACD in bull mode on sell signal, energy very low. Saw an interesting comment this morning about oil, or I guess actually it was yesterday. And the reason that the Biden administration is not refilling the SPR, the Strategic Petroleum Reserve at this point, and this makes sense to me. As soon as it becomes obvious that the U.S. is going to refill the SPR, that puts a bid, a government bid, a solid bid into the oil markets. And so the article that I was reading, they were saying that as soon as the United States makes it clear that they're going to refill the SPR, oil's going to quickly pop back into triple digits. It'll be back up over $100 a barrel. And so maybe, there's some psychology. Maybe it makes sense. We need to fill the SPR. Maybe we can do it without announcing it to the world, albeit, the people in the oil markets. I guess there's really no way. They're not going to hide. If they start filling the SPR, it's going to be obvious. So, but anyway, I thought that was interesting that a government bid in the oil markets it's going to send or will send prices significantly higher. So that's all I've got for the charts this morning, folks. I will talk to you soon.